Welcome to Trading for Beginners, brought to you by Crypto Chronicles. In this episode, we'll be covering the basics of trading to help you get started on your trading journey. Whether you're interested in stocks, cryptocurrencies, Forex, or other financial instruments, understanding the fundamentals of trading is essential. So, let's dive in and learn the basics of trading. Trading is the buying and selling of financial assets, such as stocks, bonds, currencies, or commodities, with the aim of profiting from price movements. It involves understanding market dynamics, analyzing price charts, and making informed trading decisions. There are different types of trading strategies, including day trading, swing trading, and long-term investing. Day trading involves buying and selling assets within a single trading day, while swing trading involves holding assets for a few days to several weeks. Long-term investing, on the other hand, focuses on holding assets for an extended period, usually years, to capitalize on potential long-term growth. Risk management is a crucial aspect of trading for beginners. It's important to understand the risks involved and use risk management techniques, such as setting stop-loss orders and managing position sizes, to protect your capital and minimize losses. To make informed trading decisions, traders use different types of analysis, such as technical analysis and fundamental analysis. Technical analysis involves studying price charts, patterns, and indicators to identify potential price trends and patterns. Fundamental analysis, on the other hand, involves analyzing financial statements, economic indicators, and news events to assess the intrinsic value of an asset. Trading is done through online platforms provided by brokers. These platforms allow you to place buy and sell orders, monitor your positions, and manage your portfolio. It's important to choose a reliable and reputable broker that suits your trading needs and offers competitive fees. Trading can be emotionally challenging, and it's crucial to manage your emotions and maintain discipline. Avoid making impulsive decisions based on emotions, and stick to your trading plan and risk management strategies. Keeping a trading journal can also help you track your trades and learn from your successes and failures. In summary, trading involves buying and selling financial assets with the aim of profiting from price movements. It requires understanding different types of trading strategies, managing risks, analyzing markets, and using trading platforms and brokers. Emotions and discipline are also important aspects to consider. Remember, trading takes time, effort, and practice, so be patient and keep learning. That's it for today's episode of Trading for Beginners. I hope you've gained valuable insights into the basics of trading. Remember to start small, trade responsibly, and continue learning as you progress on your trading journey. Thanks for watching.